Welcome to our weekly Forex forecast, and this is for trading for the week of March 9th to the 13th, 2020. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. All right, as usual, we'll start off by taking a look at our calendar here. And actually, before we dive into the calendar, something that has happened over the weekend and is likely to have repercussions in the market is that Italy they've put in a state of emergency, or they have locked down few million people, and including Venice and Milan, all of them are locked down, and the travel in and out of the cities is restricted. So the airlines are still working, but this is unprecedented. We haven't seen this type of kind of lockdown, or it's not exactly lockdown, but they're trying to contain the virus. It has spread quite a bit. The number of deaths have gone up, and number of people who have been infected by the virus has gone up considerably. So because of this, we could see a problem in the market, or we could see an impact on euro. So keep an eye on that, because if Italy is doing this and the virus has spread there, it is quite possible, or it will spread in the rest of the European Union, which means it will have a big negative impact on the economy, because if they are shutting things down like China was, and we saw that Chinese economy is having a negative impact from it, so we are likely to see comments in regards to that, and it will have an impact on the market. So that's something just to keep in mind when you are trading this week. Right now, we are kind of going through the markets that, or market dynamics that we haven't seen in quite some time. SARS was the last time that we have this type of stuff. But then interest rates were higher. Now they're not quite as high, and all the countries are expecting an impact to the economy because of the coronavirus, because the supply chains are disrupted. And if the countries start locking down in order to contain people, then that will have an even bigger impact, because all the everything is basically comes down to standstill and bare minimums. So just something to be aware of. All right, so having said that, let's look at what we have coming up. We have some GDP numbers here for Japan. Japanese yen has been going up because it's a safe haven currency, and when there is so much risk-off environment in the market, that means investors are scared, then the Japanese yen goes up. Because of it being a safe haven currency here. And with Japanese yen going up, Bank of Japan doesn't want that to happen. So we may see intervention from Bank of Japan. And in fact, they may have already been doing that. So just another thing to be aware of, we could see, and Swiss National Bank, they are notorious for doing Forex interventions as well, which means they will actually go and sell their currency because it's getting too strong. And Bank of Japan will do that. They'll just go sell the currency and purchase something else, swap it for something else in order to actually make the value of Japanese yen go down. So that's another thing to keep in mind. So here we have GDP numbers. So if the GDP numbers are lower than expected here, then we are likely to see Japanese yen go down right there. And then we also have on Monday, we have these housing starts and building permits numbers for Canada. So keep an eye on the impact here. Actually, another thing here, we have investor confidence numbers here from Euro, and they are supposed to drop quite a bit. So if we see even a bigger drop than this, that will be negative for the Euro. So we'll have to keep an eye on that. We have business confidence numbers here from Australia as well. And with all actually the numbers out of Australia have not been too bad lately. And you know, Australian dollar actually did well based on the numbers, even though overall it's getting hammered. But if the business confidence numbers come in lower now with all the coronavirus impact, then that would be bad for Australian dollar, and we could see Australian dollar drop. Same thing here with New Zealand here. So Australia has cut rates, and with New Zealand has cut rates as well, actually, but they have also said that they are going to adjust the monetary policy to make sure that they overcome the impact of the coronavirus, and Australia has said the same thing. So if these comments are repeated here by Reserve Bank of New Zealand Governor Orr, then we are likely to see a drop in New Zealand dollar. However, on the other hand, if we see that they are not too concerned about it in terms of impact on the economy, then we could see it go up. But I highly doubt that, because they have previously said that they are willing to take action. So the banks that have not said that they're going to loosen their monetary policy or they're going to take aggressive action at this point are ECB and Bank of England. And if we see ECB come out this week and talk about monetary policy or loosening the monetary policy, then that will be negative for the euro. But the problem with ECB is that the interest rates are so low already; they're in the negatives, that they can't really drop them any further. So they would have to do something else in order to support the markets. So keep an eye out for announcements from ECB, especially if we are seeing widespread impact of coronavirus in Italy, which could then go on to other countries in the European Union. Okay, so, and then coming up, we have Reserve Bank of Australia, Deputy Governor speaking as well. Same thing if he expresses concerns. Actually, I don't even know if it's a he or she, but if they express concerns in regard to the economy and the impact from coronavirus, that will be negative here. And then we have GDP numbers here for British pound here. We haven't really seen much of an impact on the British pound. We have seen euro and pound go up actually because of US dollar being hammered so much, because Fed keeps coming and talking about interest rate cuts. They have been so aggressive in the last a week or two in terms of the interest rate cuts and how they're going to support the economy, that US dollar just tanked. And the reason they are saying all this is because the equities market, the stock market, is just going nuts. It was been like falling off of the cliff after being so bullish. It's just tanked. And because of the problems with the coronavirus again, because even though the problems are mostly in China or the Asian countries, the problem is China exports a lot of stuff to US and a lot of materials that US needs in order to function. So if the supply chains are disrupted, it will have a negative impact on the US. So that's why we have seen Fed actually come out and be so aggressive in terms of rates. So now with all that happening, so we'll have to keep an eye on ECB, but Bank of England has not said anything at all about it. So keep an eye out for Bank of England as well. At this point, I'm not expecting it, but if it spreads in the European Union, then we're likely to see a spread in UK as well. So that's something to keep in mind here. And then in terms of the numbers here, numbers have been coming in line with expectations or better for UK. So I'm not expecting much of an impact. If they come in line with expectations, it will be good for British pound. We could see it go up further. We also have the budget release here and CPI numbers here. These are very important, but at this point, I think interest rate will take precedent over everything else. Banks monitor the inflation numbers, but right now, I guess we'll see an impact. If they're bad, then it will be negative for US dollar, and we could see more of a negative impact. But right now, market is aggressively pricing in more interest rate cuts from the Fed in March as well as in April. So that's why US dollar is dropping so much. And on Thursday here we go, we have ECB, and the interest rate's already zero here. That's why they can't really drop it. They could go into the negatives. I think the actual rate is in the negatives already, but they may come and talk about how else will they use monetary policy to support the markets, and especially with what's going on in Italy right now, that just makes it even more important, or makes ECB's role even more important, because that will have a negative impact on the stock markets in the Eurozone. So this ECB press conference and the statement, monetary policy statement, will be very important this week. And then we have CPI numbers. Again, these numbers are important, but right now, I think the main focus of everything is around the impact of coronavirus. So let's go on to the charts here, and we'll take a look at what's going on. Euro has had a tremendous week. We haven't seen this type of move in Euro since we were back here in October of 2017. And then basically in 2017 is when we saw Euro move so aggressively. And like I said, the reason it's been moving so aggressively is because US dollar is being sold, because now the differentials are not that much better. So people were using euros as a funding currency to invest in the US, because if they borrowed at very low rates, like zero or almost negative here, and they invested at and got a return of 1.75, and even better if you leverage them, then that was the reason that they were moving the money from Eurozone to the US and using Euro as the funding currency. And if the returns in the US are not going to be that high, then everybody's taking their money out, buying euros back again. So basically doing the opposite of what they were doing before, and that's why Euro has gone up so aggressively as a result of that. So here, bias is bullish still. I would look for a pullback into 1.200, and then we could see a further move up. But having said that, with what's going on in Italy here, that can change the dynamics of the market. It could mean that Euro could sell aggressively, and we could see price go back down. So right now we have just unprecedented, well, it's not unprecedented, but we have this, actually it is unprecedented, because even when SARS was here, we didn't see this type of lockdowns in order to basically protect the people who are not infected. So be careful this week, expect volatility, that's what I would say. But just based on technicals here, it is bullish. But I will expect it to drop as well, so we could see something like this. And actually, you know what, we could also see a drop here just on the market open, and price could just open low. So that's something that can happen. Based on technicals, this is bullish though, and then this is what it's looking like because of the interest rate situation and what's going on with Fed. So if ECB does not do anything, then this could happen. But overall, I think what is more likely to happen is that it will just become range bound, something like that. And stay within this range here. That's what I would expect Euro to do. So right now, I am neutral on Euro, because even though it's looking very bullish, it could change. Pound here, pound has gone up again a lot because of the Fed interest rate cuts. And at this point, we could see British pound go up if Euro starts to sell, because Euro pound will come into play. So we have two kind of scenarios here that could happen for British pound. One is that the fear and the problems in Italy would spread to European Union, in the sense that the impact will happen on the financial markets. And then that could then go into UK as well. But on the other hand, we could also see that because of the fear in the European markets, people could move their money into British pound, which means the British pound would go up. So we have two different scenarios that could happen here, and we'll just have to wait and see. what happens here in terms of how we are going to, what's going to happen. So keep an eye out again, but right now this is bullish here, and we are likely to see a bullish impact on the market based on just the technicals, and if the euro starts to sell. So bias here is bullish, and next target here is 1.3280. And then if it continues on, we could go further into 1.3420. But it is also into resistance here, and this is where price has struggled previously. So we could see it just become range bound and just drop from all the concerns in the Eurozone. So we have two scenarios. And I will say bullish for now for this one, but I would be open to changing my opinion on it. Australian dollar here, we have seen Australian dollar go up as a result of the weak US dollar here. And if at this point, I do expect US dollar to stay weak overall, because Fed is going to keep talking about cutting rates. So bias here is bullish. Now, again, this one is also into resistance. So that's something to keep in mind. It could turn here, but for now, bias is bullish. And I'm looking at next target is 0.6750 and 0.6840. Bias is bullish for Aussie dollar. New Zealand dollar, this one's looking bullish as well. We saw price bounce off of these support levels here. Everything is bullish against the US dollar because of the interest rate stuff here. So looking for price to move up further here. So bullish bias, first target here would be 0.6450. And then I am looking at 0.6530. So bullish bias here for New Zealand dollar here. And but with all the US dollars with all the US dollar crosses here, now with Eurozone in trouble in terms of the virus, now what we could see is that there is a lot of fear that comes into the European market, which means we could see a massive move into the US dollar. And that means we could see a reversal of all of these moves that we saw last week. And that's definitely a scenario that could happen. So let's keep an eye out on that. So if that happens, then we are likely to see just a reversal here and a continuation to the downside. But for now, just based on the technicals alone, this is bullish. Dollar CAD here. So we saw Bank of Canada cut rates and oil has been dropping. So overall, Canadian dollar is one of the currencies that actually is, of the majors, it is actually weaker against the US dollar. Everything else is stronger. That's because of the interest rate cuts plus the oil. Oil is dropping. So that's another thing causing the Canadian dollar to drop. So this one at this point, we could see a bullish move in here. So I'm looking for price to go up. We have next target at 1.3530, and then it could go even further into 1.3660 here. So bias is bullish, and these are the next two targets I'm looking at in terms of our dollar CAD. Now, do keep in mind this is also into resistance. So if price is not able to go through 1.3480 level here, we could see a drop as well. But like I said, with the virus issues in the Eurozone, we could see US dollar go back up. So this one could go up even further. All right, Euro Pound here. Euro Pound has been very, very strong. And now I would look for this one to get turned around, especially Euro Pound to get turned around with all the problems that we are going to see in the Eurozone. So this is kind of what I'm expecting, or it may not even go there. It may just draw from here. So watch this one. This one is the one that I feel most confident about at this point, because I do expect problems in the euro because of the Eurozone virus issues, especially with Italy shutting down like that. we have not seen in any of the Western countries. China was the only one who did it. And other Asian countries haven't done it actually. And so this is the first Western country that we have seen, or I should say developed country that has, that we have seen take this kind of action. And it's not normal. So that's why we are likely to see euro drop. And if euro drops, euro pound is likely to drop. So in this case, in terms of the targets, we are looking at first target of a 0.8600, and then I will look at 0.8475, and even potentially all the way to the downside here. So bias is bearish for euro pound. Euro Swiss franc, this one's already bearish. I will look for this one to continue. Now, I was expecting the markets, the fears to basically quell for a little bit, but with the Italy here, we could see renewed selling here. So bias is bearish here. Next target for Euro Swiss franc is 1.0400. So basically in all the euro crosses, I'm looking for euro crosses to drop across the board. Euro Swiss franc here, so if the British pound starts going up, I would expect Euro Swiss franc to start going up, sorry, pound Swiss franc to start going up as well. So we just need to wait and see. Right now this is looking bearish because of all the fear in the market, in the stock market, that is coming into or causing flows into safe haven assets like Swiss franc. But if pound starts going up and euro starts selling, then this one could go up. So right now my bias here would be more neutral. So I think we could just go sideways in here, kind of like this. So neutral here for pound Swiss franc. Dollar Swiss franc here, this one, of course, with dollar being weak, it's just dropped right through our previous targets here. So now bias is still bearish. I would look for a pullback in the US dollar right now. So this one could go up as a result of that. So in this case, we'll have to see how much flows go into the US dollar. If there's a lot of money flowing into the US dollar, we could see US dollar go up like this all the way into 0.9635. On the flip side though, if the fear in the markets spreads across the board, then Swiss franc is likely to go up, which means we'll see a continuation to the downside. So at this point, I'm just waiting to see how markets will react in terms of British pound. So I do expect US dollar to have a positive influence because of the Eurozone, or euro to drop. So US dollar will go up as a result. But British pound is another one that could go up. So with this one, with the US dollar, dollar Swiss franc here, bias is still to the downside, but we could get a pullback. So watch out for that. Pound yen, this one has kind of pulled back a little bit. Bias is still to the downside, but with, like I said, with British pound, if euro sells, pound will gain, which means pound yen is likely to go up as well. So right now, I am just going to wait and see how the market reacts to it. And it is into it's into support here. So watch out for this one. So I'm going to be neutral on this. So if the market stays below 139.20, then it's likely to drop. But if pound starts to go up, then this one could go back all the way into 141. So at this point, neutral for pound yen. Euro yen, this one I am looking for it to drop. 117 is the next target. So far, euro yen has just been going sideways in this range for a number of weeks at this point. But now with the situation changing, I would expect this to drop. So bias is bearish. We also have a pin bar here. So 117 is the first target. 115.80 is the second target for euro yen. Dollar yen, we have seen a huge drop here because of US dollar dropping. Now this is coming into support here. So if the US dollar strengthens here, we are likely to see this one go back up. But the problem is Japanese yen will still be strong. So we could get a move like this. So I would watch out for that. Dollar yen, I am going to be neutral on this one as well and watch how the market dynamics play out at the moment. So I'm looking for a move in this, but if the fear kind of spreads across the market, then this one could drop further as well because of Japanese yen, not so much for dollar. Aussie yen, this one went up and has dropped since then. It's just kind of gone sideways here, hasn't really done a whole lot. With this one here, I'm looking for a bearish move here as well. And now if the euro drops though, we could see some flows into Australian dollar as well. But overall here from the yen perspective, I am looking for a drop. And in terms of targets, we have 68 and 66.00 as the second target for Aussie yen. And New Zealand yen, same thing here. We saw a similar move, prices sitting right into the support here. So same thing applies for this one as well. We could see a drop towards 65.80 or 65.20 here. So bias is bearish for this one as well. CAD yen, this one has been tanking because of the problems, well, interest rate drop from Bank of Canada, as well as the oil that has just tanked. So bias is bearish here, still looking for a bearish move. And then we have a next target here at 76.60. We could get a bit of a pullback here, but we'll have to see. So this is the type of move we could get. Bias is bearish here for CAD yen. All right, so let's move on to other asset classes here. We'll start off with silver. Silver has gone up, and with current market situations, we could see this one go up even further. It is into resistance and it was pulling back a bit, but I think things can change here, causing this one to go up. So we could get a pullback though, either into 17.10 or even into 17.00 before it moves up. But bias here is bullish for silver, and I will look for a move higher. And then we'll have to see what happens during the week, what they come out with. I'm sure we'll hear from ECB and the leadership of the country and all of that. So we'll see how that happens, or how things flow in the Eurozone for this week. And how they spread out to the rest of the markets, because markets are so interconnected and they are really being impacted by the fears now. So this is basically what I'm looking for here, is either a straight move up or we could see something like this. So bias is bullish here for silver. First target 17.60 and then 18.16 or 18.25 is the next target here for silver. Gold, same thing. We saw a big move up here from gold, and this is still looking bullish here. We need to go out a fair bit in order to get the next targets here. So bullish bias for gold, and next targets here will be 1700 is very close, so 1720 and 1750 are some of the levels we could see gold go up to. So bias is bullish, but since it's moved up quite a bit, we could get a pullback back into 1645, so keep an eye on it, but bias is bullish for gold here as well. Oil has just tanked, and with oil tanking like this. So in regards to oil, what's going on? Oil has been going down because China is a big importer of oil and uses oil a lot. Because of all the manufacturing that happens in China. And if Chinese economy is being negatively impacted by the virus, which means we will not, or they will not import as much oil. As a result of that, oil prices drop. So we did see OPEC come and talk about potentially cutting production levels. And the problem is Russia may not do that. They're not kind of following along with OPEC. So if OPEC cuts, which means Russia can sell more oil. So there's this dynamics going on in the market right now. So they have OPEC has talked about cutting production of oil, but we'll have to see if that actually happens. So right now, this is bearish and we could see it drop even further. And targets here would be, first target is 39.80, and it could go all the way into 36. That would not be good. So we have basically we have a bearish bias here for oil, and looking at potential pullback into 43 potentially, and then a drop. So bearish bias for oil. Copper here, copper has gone back and forth. It's range bound at the moment. So my bias is neutral, looking for price to trade, still trade in the range. So we have range neutral bias here. Bitcoin has gone up last week here. It came into the support and couldn't get through that. So it's going up right now. So bias is bullish here. Now, with problems in the Eurozone, we could see a flow into Bitcoin. So watch out for that. So bias is bullish here. I am looking at 96.50 as one target, and then 10,000 as the second target here. So bias is bullish for Bitcoin. Stock markets, let's see what's going on. We saw from daily perspective, we have seen quite a back and forth in terms of the stock market here. S&P 500 has been going, it's been neutral over the last little while. Neutral in the sense that it's just been trading in this range here. Hasn't been able to break the resistance. It's just come back down from that. So right now, a bias is neutral on this, neutral to bearish actually. So with Italy shutting down, we could see a widespread fear in the markets. And as a result of that, I would look for a drop towards 27.70 here. So basically, it could go from all the European markets into the US markets as well. So watch out for that. So I'm neutral to bearish on this. Neutral in the sense that it may just trade in this range it's been trading in over the last few days. But if it drops through the support level here at 2,900, I will look for a drop further into 27.70. So neutral to bearish bias here for S&P 500. Nasdaq here has been doing the same thing. It's just gone sideways this week. This is a daily chart here. We have been seeing this sideways move here, and similar scenario as we saw to S&P 500. So my bias is neutral in the sense that it could just go back and forth in this range to bearish, and then we could see price drop. So in this case, the next target, so I'm not looking for it to go up too much. So next target here is 78.50 for Nasdaq. So neutral to bearish bias. And then we have Dow Jones here. This one as well, just going sideways here over the last week, has gone back and forth between 27,000 to 25,000 here. So at this point, from weekly perspective, we have exactly the same move here as well. And in terms of the movement here, we could see, so first thing I'm looking for here is, again, sideways like this here. And the second one would be more, it just drops, right? So it could pull back and then just drop from here. So neutral to bearish bias for Dow Jones here. All right, this one I'm expecting to drop here with the DAX. With fears in the European market, I would expect equities to drop here. So bias is still bearish here. Next target is 11,250. And then below that, we are looking at 11,000. So bias is bearish for DAX. UK here, this one could also get negatively impacted by what's going on in the Eurozone with Italy here. So this one has gone sideways as well. We've seen move between 68.80 to 64.40 at this point. So if we take a look at it, it's still downwards here. So bias is still bearish here. I was looking for equity markets to go up this week, but now with the Italy situation, things could change and we could have renewed fears come into the market. But because these markets have dropped so much, it just is normal to see a pullback. But with the Italy here, so we'll have to just see how things kind of play out here. But I would expect an impact from Eurozone into UK, into equity markets here. So bias here is bearish 62.50, and then we're looking at 60.50 as the targets. We could get a pullback here into 67.30-ish level here, and then we could see a drop or just a shallow pullback here into 6,600. So I'll keep an eye out on those two levels, but right now bias is bearish for our FTSE here. And then last but not least, Nikkei, we have seen that one drop here. So expecting it to drop further here. Bias is bearish. Now do keep an eye out for pullbacks, potentially into 21,000, and then looking for a move back lower. So bias is bearish for this one as well. So overall, expect volatility in the market. I'm expecting volatility in the market. We could see some crazy moves, so watch out for that. And that's all I can say. I think things will change as the week unfolds and what the sentiment grows in. So this week, the moves will be based more on sentiment as opposed to anything else. Not fundamentals, not anything else. Pure sentiment is what we'll be trading this week. So keep an eye on sentiment and see. I would suggest looking at the news and see how investors are feeling in regards to the sentiment, and that will guide our moves this week. So good luck with trading this week, and I will see you for our daily analysis. I usually post it on the YouTube channel. That is done every evening, New York evening. So if you're in the Eurozone, you can see it in the morning, or if you are in the Americas, you can see it in the evening. All right, you guys have a wonderful trading week, and I'll see you again. Bye for now.